Welcome to the Closing Beat. Happy Monday. Got started early there. I love it. How you doing today? This is the Closing Beat. It's just a simple show that we do each day to kind of cover the good, the bad, and the ugly of the stock market. We'll just share our facts, the things that we find. We try to leave opinion out of it until the very end, and sometimes I still can't get a couple things in there. But today we got a lot to cover, so we're going to dive right in. Thursday, we're going to do an open house, by the way. If you want to kind of see what it's like to work with Jazz Well, Thursday at 8 p.m., we're going to go live just like we normally do for our customers, only this one's going to be open to the public. Maybe I'll try to teach you something a little new or different to share what it's like to kind of work with us here at Jazz Well. Okay, here's the thing. You're going to see in the news today, I tweeted about this earlier today because the media is going to make a big deal out of this, and I wanted to put the facts behind it so you know where to go emotionally with this government shutdown. It's officially the longest government shutdown in history, and did you know that government shutdowns are actually really rare? And there's been a lot of them lately, so if you've been following politics or the markets lately, you know that it sort of happens more and more. But if you go back before 1990, there were only 3 government shutdowns. 2 of them lasted less than 1 day, meaning the government shut down at midnight, Congress stayed overnight, they made something happen, and by the time we woke up, the deal was already done and the government was reopened, so it lasted less than 1 day. One lasted 1 day. So you got 2 that lasted no days and 1 that lasted 1 day before 1990. Now after that, they become really popular. It's become kind of a political position to shut down the government for whatever each side is arguing for, or whatever they're not getting done that time. Anyways, since 1990, there's actually been 6 government shutdowns, so more and more popular, and there's a couple stats I want to share with you. The last major one was in October of 2013. It was closed for 16 days. There was no economic impact. In fact, they teach this right now in college-level finance classes. They study the effects of government shutdown on the overall economy and the markets. There was no economic impact. You're going to hear that a lot, that the economy's suffering because of the government shutdown. Now, that may be the case going forward, but at least as of now, looking back in what really short history and what little data that we have, no economic impact to worry about. The longest one was actually December 1995. That one lasted 21 days, and believe it or not, the stock market actually rallied during the whole thing and in spite of the government shutdown. Kind of what we see going on right now, right? So when you see on TV they make the argument that the markets or the economy are going to suffer, well, we have a little bit of data to go on with the previous government shutdowns. It had no impact at all. Now, here's the interesting thing. In any year where there was a government shutdown, whoever was president was reelected to a second term. So Clinton reelected to that second term there. His approval rating was only 46.9 at the time, which is really low. President Trump has the lowest at the moment, at this very moment, at 41%. And then the Obama one, of course, there was a government shutdown during his time period. So if you're looking at the stats there, government shutdowns are actually good for re-election. But again, we have such a small amount of data to go on, you can't really make too big of an argument on that. Anyways, that's all I wanted to share with you on that. Just something to, again, where the media is going to go one way, you'll know the facts and you'll know what to expect going forward. This one's going to be rare now. And somebody got it right, believe it or not. I said, last week I said, what's it going to take to get the government to reopen? Well, to get these guys to start negotiating, and I said, leave a comment. I'll send you a towel. I'll send you a coffee cup. One person got it right. The answer was credit rating. If you look back at all the government shutdowns that had any length, the one in October of 2013 and December of 95, the only thing that got the needle moving was when the S&P came out and said, we're a little concerned, we may have to adjust the U.S.'s credit rating, and so that's what got them talking. All of a sudden, talks sped up and they got something done there. So we'll see what happens. Of course, we'll be following it along, and we'll help you out with that as we go. Look at the markets today. Off to the right, you can see the Dow was down 86, S&P lost 13 or 0.5%, and the Nasdaq basically lost 1%. Not really a big deal. There's a really interesting theme going on here in the markets where, and we've pointed it out, where the markets start lower and they come off of their lows. Lots of stocks are starting lower and they're coming off of their lows. Earnings is going to continue to be the big focus there. We had Citigroup today. We'll go over that. But aside from the shutdown, earnings will be the sort of main focus. We've got a lot of big banks due to report. We got JP Morgan tomorrow, Wells Fargo tomorrow, and then you got airlines, Delta Airlines and United Airlines after the close. Now, I don't know, we don't need to look at the chart yet. JP Morgan has the strongest history out of the group of beating earnings. If you look at JP Morgan, they beat earnings 83% of the time. Wells Fargo only beats 52% of the time. That's just something fun I like to point out. We're not like active traders here. I'm not going to go buying and selling stocks because of that data. I just think it's kind of fun to point out. Also, United Healthcare will report tomorrow, and they beat earnings out of everybody. They're the best performer. They beat 91% of the time on earnings and revenue. They beat 67% of the time. So if you had to place a bet, you kind of know the way you'd have to bet, right? At least based on that. Again, just for fun, like to point that sort of stuff out just because, I don't know, if you find it interesting, I'll keep sharing it. I find it interesting. On the charts there, you see the S&P 500. We're going to continue our conversation from last week that the markets have hit a temporary ceiling, and they haven't pulled back yet. So there's a couple really interesting things that are going to happen here. Number one, we hit a ceiling. You fully expect the stock market to pause or pull back. The ceiling is, I drew here for you, just the number that everybody's using. I drew it on the chart in a horizontal line so you could see. We're all looking at the same spot. Here's what's happening. The markets won't pull back. Yeah, they fell a little today, but not really that big of a deal. They won't pull back. So anyone who bet on the markets to go down at this point or plays anything inversely correlated to the market, they're not getting their way. The markets haven't fallen yet. It's not a big deal just yet, but eventually these people are going to get nervous and say, well, I better buy back my short position, which could push us even higher. I hope that doesn't happen personally. I kind of hope that we pull back a little bit from here. But for the moment, when we start lower, we're finishing off of those lows. And you can see it as indicated there by these little candlesticks on the chart. If you're not familiar with candlesticks and you want to better understand that, I have 3 classes available for our customers. You're welcome to check it out. Just send me an email. The Nasdaq pulling back off the 50-day moving average, although not that much. So you're going to have a lot of tech traders betting that the markets are going to pull back. You're going to have a lot of people that went long, meaning they bought somewhere along this way, and they have a pretty nice profit in the short term. And those short-term traders may look to take their profits here, understanding that we've hit that short-term ceiling, and if so, that could pull the markets back. If they do sell and the markets don't pull back, now you have those people going, well, shoot, shouldn't have sold. I guess I'll buy back in, which could push us even higher there. And then the Dow I just put up here, the same line. We're basically at the same resistance area, something for you to focus on there for, stocks that have, or indices that have reached their resistance level. In the news today, or sector-wise, I'm using the XLU for you to check this out. Utility stocks were the worst performing sector. PG&E. Wow, that's getting nasty over there. PG&E, California Electric Company, they're going to file for bankruptcy. I believe they said 2 weeks from now, or they're preparing it. Voluntary bankruptcy protection. Basically, it means if you use them, or because that's your power company in California, they've already pretty much announced to you, you probably already know, your rates are going up because you're going to have to cover this, not the company. The CEO of the company, she stepped down today. She's like, I'm out. I can't take it. She's going to get millions of dollars, by the way, but she's out because, hey, pressure's building. These guys got to spend a lot. So if you look at charts today of any utility stocks, they suffered a little bit. The sector was the weaker of the groups today. Other weakness, healthcare. You got healthcare, and look, when you look at these sectors, you're going to see that they've hit resistance areas or temporary ceilings as well. Healthcare is one of them. The 200-day moving average is right here, highlighted in red. Very popular moving average. A lot of long-term investors like to use that, and short-term investors will use it as stopping points for stocks for them to just buy and sell and take their profits wherever. So healthcare down a little bit on the day. It's up over 7% since hitting those lows back there around $80.50. Banks, they were positive today. Citigroup reported earnings. The earnings were mostly better than expected. These guys are incredible. So Citigroup shares, I believe, were higher by like 4%. Yeah, 4%, pretty much right on the dot. That helped support the overall banking sector today. Citigroup basically said, earnings better than expected. That all looked good. These guys are cutting costs like a boss, right? Like if you have a company and you're trying to figure out ways to cut costs, that's one thing. There's probably, there's 6 of us, right? So it's easy to figure out how to cut costs. A company that large that has consistently been able to cut costs at the rate that they've been doing it, That's impressive. I'm got to say, I don't like to say that often, like where I'm impressed of something and we haven't seen it happen before. Citigroup's doing a great job there. The only negative on the report, which had the stock start lower on the day, was they missed on revenue. But as everybody dug in there a little bit deeper, we found that the miss on revenue wasn't a company-wide problem. It was limited to their bonds trading. They didn't do well with bonds trading. They missed on revenue by about $500 million. Gives you an idea of how much money they make on bond trading there. So they also said lower loan losses were helpful for their last quarter here. So not too bad. Remember, tomorrow, JP Morgan, it was up 1% today. JP Morgan, I believe, was it downgraded today? No, it wasn't. Okay, sorry. My bad. Anyways, JP Morgan to report earnings tomorrow. It'll be tomorrow morning before the open there, and then Wells Fargo as well. So now you know you're at least prepared a little bit for what's going on there. These stocks are all trying to come off their lows. If the other companies can report something similar to this, then that'll be great. In the sector, by the way, if you want to pay attention, Goldman Sachs is always your best performer in terms of reporting. That they beat on earnings or they beat on revenues. Now they're going to report on Wednesday. And Goldman Sachs beats on earnings 90% of the time. They beat on revenue 76% of the time. That's going to be your winner in the group, and everybody will be looking at that one, so don't feel like you'll miss anything. There we go. Lululemon. I don't know if that's how you say it, but that's how I like to say it. Shares were higher today. They raised their full year guidance. They actually don't report earnings until March 7th. It's a while from now, but they raised their guidance for the full year. Strong sales momentum. That was their key word. They must have said it 20 times in their little, statement issue today. Strong sales momentum, and basically, if you take a look at the charts here, you've got a move today that at the highs recovered basically half of everything it lost from October to November. Compare that to the stock market. The S&P 500 has not recovered half from October to December. Compare that to the Nasdaq if you want, has not lost half, or has not recovered half. The Dow has not recovered half. What does that tell you? Lululemon, clearly a much more relatively strong stock to the overall market. So that's hinting you at something. They were up like 80% last year, and I don't know, for this, so far this year, how much are they up? It's got to be good. Right? They've done well. Since the beginning of the year, they've added 18%. So Lululemon's sticking out there. Apparently things are going well for them. Newmont Mining, the company is going to buy another gold mining company. I happen to sort of know quite a bit about these. I used to love these gold mining stocks for active trading. Newmont Mining is going to buy Goldcorp, which is symbol GG. So Newmont NEM, Goldcorp is symbol GG, $10 billion. And so you see the price reflected in Goldcorp today relative to Newmont Mining. That'll be great. I mean, there's a lot of good things that'll happen with that acquisition. So not bad. Crocs almost hit new highs today. Crocs, the rubber shoes that you put on your feet, they sell those things. Believe it or not, the stock at new highs today. They raised their fourth quarter guidance, and they said that they see improved gross margins, meaning they're starting to spread out a little bit relative to where they were. The stock was near highs. It continues to be in a very, very clean uptrend. And then I thought I'd point out Yeti. You guys know Yeti, right? The symbol is just YETI. It's a recent IPO. That's why it looks so funky on the charts there. They came out and said that they expect to see stronger fourth quarter sales results from their earnings there. They don't report earnings here just yet, but they basically gave everybody a heads up. Oh. There you go. Oops, shoot. This thing is a little bit stalled here. Anyways, Gannett, I can't seem to, oh, there we go. Gannett hitting new highs here today. That's a buyout offer. The company basically said they got a buyout offer. They're going to take it seriously, so we'll see. It's kind of news in the works there. And I thought I'd point out, what happened to FANG? You notice how nobody talks about FANG stocks anymore? What happened? Is that just not cool? Facebook was the only FANG name higher today. Apple was lower. Amazon was lower. They got a lot going on over there at Amazon. Netflix lower on the day, all by about 1%. Not really like big declines you'd panic about. Alphabet or Google down 1.25% there as well. And I'll keep the same comments. We're not out of the woods just yet. We've got the government shutdown. So if you're looking at the stock market and you're like, oh man, this is great, we're coming off the lows, everything's great. If you see some down days in here and some pressure, some panic, a little bit more weakness, I wouldn't be worried about that. You got the government shutdown, you've got, of course, earnings, which is just going to make the markets look like Jell-O on a plate. Put a bunch of Jell-O on the plate, shake it around, and watch it do a whole lot of nothing. I kind of feel like that's what you're going to see the stock markets do through earnings, because everybody's lowered the bar. Citigroup was a great example. They lowered the bar so low on Citigroup, Citigroup beat the new lowered expectations there. You're going to see a lot of that, I think, this earnings, and that will be the measurement of whether a stock performs well or not. You got the Brexit vote tomorrow, right? We'll cover it tomorrow. And of course, the trade discussions. Any possibility of news coming out in those trade discussions could really move the market. So there's a lot going on at the moment. But stock market-wise, a little pullback wouldn't hurt anybody, I think. So just know that I'm kind of cheering for the markets to fall. Thumbs up for teaching something new every day. Cool, I said something different. I love it. PG&E, yeah, did I pull that chart up for you guys? That's not even like one you want to look at. 50% down on the day, 52% lower on the day at $8. It's not good. It's not good for the stock. It's also not good for the poor people in California that are going to have to pay a lot more for power, and doesn't seem like they're going to have any other choice. That's horrible. That is horrible how that happens. You're very welcome, JP. Any more updates on Sears? The judge that's overseeing the bankruptcy gave Eddie Lampert, he's the former CEO, he runs the hedge fund that basically owns Sears. He gave them a week. I covered it last week, I forget now. He basically got more time to put in his $5 billion offer. I think he either did it or is about to do it. So Sears is not technically dead yet. Wonder if we could clear up what counts as investment income to the IRS. Is only dividends and realized gains. I'm not going to touch an accounting question. I can tell you that capital gains from realized gains in your taxable accounts you do need to include. Dividends you do need to include if you are, again, if those are in taxable accounts. If it's in an IRA or something, then no big deal. So, yeah, that's basically it. Hopefully I answered any questions there. Appreciate any of the comments or questions. We'll be back tomorrow to do this all over again, and open house on Thursday. If you want to join us, we'll be here live Thursday at 8 o'clock. Yeah, that's all I have. Enjoy your Monday. Talk to you soon.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.